Okay, good morning, everybody. Welcome to day 3 of the Trader's Toolkit. Today we're gonna, like I said, just brush up on some subjects. Um,
Hey guys, good morning. Sorry, she must have lost connection. Um, but I'm here. I'm here. Exactly. And her battery, that that charger must not have been a good one. So let's give it a couple of minutes. If hopefully she'll come up soon. But thank you everyone for being here so early. I mean that shows a lot of dedication. It makes me really happy that especially if you're in California time. You gotta wake up at 5. So that's some dedication. So I really applaud that. Um, our session, like Trader said, we'll see if she joins in a minute. We'll be covering. I'll open the slide here, and maybe she can. Can you guys see the screen? Okay. All right. So we have learned about technical analysis and price action. And now that you have identified a certain play, now that you have identified certain levels, now you need to prepare your trade, and select. Obviously, so we're gonna talk about how to position yourself for scalps, for depending on whatever trade length that you're thinking of doing. And then we're going to talk about selecting the appropriate contract. Some of you that took our course already are experts on this, but we're going to briefly talk about this. And then we're going to talk about minimizing your risk by setting stop loss, which is very important, especially at this time when we have very uncertain markets, as some of you have noticed already this morning, with futures being down. And setting realistic targets. And then we'll talk about market prep. This is really, so this section, and we're just brushing on certain tools. But at the end of the day, we want to talk about market prep and interact with you guys. So don't feel free to jump in and interact as much as you can. So hopefully Trader joins us very soon, but
yeah, I'm back.
oh,
Sorry,
there you
guys.
go. Okay, go ahead, take it away. I was just covered for you.
Okay, thank you. Okay, guys. All right. So now that you guys have the tools on price action, technical analysis, it's essential that you guys know the following. How do you position yourself for not only, your trading style that you're choosing, your scalps, day trades, and swings. Also, you have to position yourself for events like today. I don't know if you guys have already looked at the market. We are taking a huge dump, and we dumped massively after hours. So let's say you were swinging, something, and you're caught in this ugly, pullback that we're having today. It's always good to buy time. All right. So I'll brush up on that, and also selecting your appropriate contract.
Go ahead and share your screen. There you go.
Okay. Also selecting your appropriate contract and minimize your risk by setting your stop loss and, again, setting some realistic targets. And we'll do a little bit of the market prep. Okay, so positions. As you guys know, time is money. Buying time in options trading is key to protecting your capital. Like I said, for example, if you are day trading on a Friday morning, 30 minutes after the market opens, it would be a good idea to get the next week expiration, just to avoid having your contract decay and you result in a loss. Because sometimes these day trades, yeah, it can happen. It can, move within your specified time frame, but then sometimes it doesn't. Sometimes it'll just take all day, it'll take a few hours, and sometimes it'll push until the end of the day. So if you're holding the same day expiration on a Friday and you wait until 12:50 that day, your contract's going to be worth not as much as it would be if you had selected a contract for the following week. Makes sense. So don't be cheap about it, because I know it's really cheap, dating on the same day expiration, and the contracts are hella cheap, this and that. But you know what? It helps to pay a little extra and just buy a little bit of more time. That's really all we're doing, guys. We're buying time, because again, time is money. And with options trading, it's really essential. And you you have to know which contracts to buy at what time, and you have to be aware of the day that you're buying contracts. Because as a beginner, I did this. I was like, oh yeah, I'm gonna start. It's Friday. I'm gonna trade Tesla, because the contracts are like 80 cents compared to what they are regularly at like $1,200 a call. And guess what? I held that for a few hours, and my contract decayed, and it expired worthless. And I was just, a mess. Where I could have bought, a contract for the following week and had, a decent gain, as opposed to having a loss because I wanted to be cheap about it. Okay, so don't be cheap about stuff. If you're trading on a Friday, and as you know, Fridays are low volume. Fridays, sometimes we don't have a lot of volume that day, and sometimes it's just best to not even trade on a Friday. Fridays are used sometimes to scalp at the open, and then possibly holding a day trade here and there, but that's about it. Okay. Okay, risk reward. I'll have Trader Morano cover this. Okay, you ready? Or
Yep,
did you
I'm
cover
ready.
your risk reward?
I'm ready. All right. So we talked about, you can leave the screen there if you, actually, no, let me just share my screen. It might be easier that way.
Oh, okay.
Nope, I can't.
Yeah, hold on one second. Okay, there.
I will up for posting that, for posting those numbers in the chat. Yeah, it was quite the dump there. Okay. All right, so risk and reward. So you want to select trades that that have higher reward than risk. Obviously, we all know that, right? It's all about probability in this game. And the way to define what you would call the risk versus what your R&R profile is, you're going to do this by using levels. Okay. This is going to help you identify, is this a high profitable trade? And then it's going to help you prepare before you even enter the trade. And also it's going to help you set realistic goals, just like Trader mentioned. But in general, your entry is going to be dependent on the levels. When it hits, you're looking for a breakout, and you're looking for one specific level to break, and that is what your entry is dependent on. But the exit of the trade is like, oh, when should I exit my position? Well, your exit will be dependent. Hopefully, you would have developed a risk versus reward profile already. But it's going to be dependent on your risk profile, and also and not just your profile. That I'll show you in a minute what I mean with risk profile, but also this has a double meaning, what I'm trying to say here. But the other thing is how much risk you're willing to tolerate, right? So I guess this will be your risk profile and risk tolerance. And obviously it's dependent on your entry. If you had a late entry, then obviously your exit is going to be very different as opposed if you had entered at, before the breakout happened. Okay. You want to set a stop loss, and if you are already moving, if you're already in the green, you're going to start setting trailing stop loss. So you're going to move your stop loss essentially up or down, wherever direction you're doing. And also, regarding risk and reward, you never want to chase, you never want to hope. As I was writing this, I was thinking this does not apply to life itself. You should chase your dreams and hope for a better life, but in trading, it doesn't apply here. So, but I'm going to give you an example. Even just looking at SPY, okay. So let's say you're looking at SPY, you want to trade SPY, and you're looking here, and you say, I think the market can keep going. Okay, but first of all, you're looking at this, and before this little shindig happened, this didn't look very bullish to me, because we're already overextended, and we've been riding this stochastic very high, and it was just really wanted to pull back. But you can look at this and say, does this have a higher risk or a higher reward, right? And in this case, you would be, well, you can set a risk and reward profile like this. So if this is your entry, your reward will be whatever the level. In this case, it doesn't really apply because we're already at all-time highs, but the width or the size of this, in this case, this will be the reward marked in green. Typically, you can use the high or the top of this box as the previous, either a all-time high, right? And then this level here, your entry, is going to be that breakout level. And then you set a stop loss, or in this case, the risk slightly less, right? And you can also use levels for that reason, using that, right? So this will be red. So you already know, in this case, this is not a good risk and reward profile, right? Because right off the bat, there is nothing, we're in no man's land. So when we already all-time highs, the risk is higher. So in this case, my reward is not very high, right? But my risk is pretty high. Okay, see how I use this level, because he could pull back as much as this 413. Okay. Any questions? Let's see if there's another ticker that's a little bit better. Okay. So let's see. Man, all of them are pulling back, so it's kind of hard, but this might be a good example. Rachel, you mentioned that earlier today. Okay, so here's this. Ignore what happened today, right? But let's say you want to enter here because you think that it could go further, right? So same thing. Here's your entry, right? If you're planning on the breakout, if you're planning to enter at the breakout of this, usually we use the previous day's high of day as our entry, unless there's another level that's more important. Then in this case, we set this level right here. Okay. Our next level of resistance, if we're going to get calls, is right here. Oops. Right here. Okay. I'm going to delete this one. Okay. So here's our entry. Okay. Same thing, right? I'm not doing anything different. Okay. Here's your reward. I'll change the color, but there's your reward, right? Which is the next support and the next resistance. Okay. Property, change it green. That's your reward. Okay. And your risk, if this was your entry, okay, your risk, it really could be, it could be this level right here. Let me zoom in a little bit more. It could be this level. It could even be the previous day's low of day. That will be your risk, right? So then you would set this will be your stop loss. Okay. So in this case, yes, it is a decent risk to reward profile. Before we had seen this, but it's not ideal, right? If you had found this pattern on Square, and you were already here at this bottom, right, at the bottom of this range, after you saw that it tested 1, 2, 3 levels, then this will be a fantastic risk and reward profile, where your risk is going to be slightly less, but your reward will be all the way to the top of this range. Okay. All right. That's it. If you want more, join our class. But for now, let me go back to the slide. Sorry. Yep. Okay. So essentially, so now that your entry, right? So your exit. So now your exit is going to be, let's say you enter Square, right? And it entered, well, in this case, it hit your stop loss, right? Hopefully you didn't swing Square calls. But it's, if you did, it's okay. We'll talk about hedging another time. How to hedge your position. That's you know, that will require a little bit more time. But if we have time today, we can cover that. But if you had traded Square and it had, let's say you had gone the other way, right? Let's say you wanted to trade puts, right, on Square. Let's say you do your analysis, right? So what is your reward for puts? And it could be as much as this level right here, which is the next level of support. Okay. And the coin just flips. You're just flipping the profile, right? So let's say you did well. So, okay. So now you move your box essentially to the next level of support for puts. And there's your box. Okay. And what you're doing here, you're trailing your stop loss, right? So now where your stop loss used to be up here, now your stop loss is higher, right? Okay, and they keep going, and you find the next support. Okay. Never chase, never hope. We talked about how to avoid chasing. Just take a deep breath. The market will always pull back. Many times it'll pull back to shake. The market makers will pull back just to shake fake bears or fake longs, so they can get cheaper positions. And never hope. Use your analysis. Trade where you see. Don't trade where you want to see. Always trade where you see. And just don't be biased. Just be open to any possibility. And then the more you do that, the less you put emotion. Because once you start hoping, now you're putting emotion into the equation, and that is a no-no. So, okay, that's it for me, trader. If you want to take over the market prep, if you want to add anything else to this, or if any of you have any questions regarding risk and reward and how to set these levels.
Okay. All right, I'll take over here. Yeah, so do you guys have any questions? We actually want to ask everyone that attended questions. Do you guys have any problem areas, like we said, anything that you guys want to brush up on? So we can talk about that. And go ahead and join on audio.
My biggest thing is confidence, I guess. Like, I've been watching the charts and stuff, and I think I'm getting better. Like, if I watch, I can see it. It's just confidence in pulling that trigger, if that makes sense.
Yeah, it's kind of hard to gain confidence when you're starting. But you know, like we mentioned before, if you follow your plan and you stick to it, your confidence will get there. And as soon as you start taking those trades, you're gonna see like you're gonna be like, wow, you know, my strategy is really working. It's gonna give you more confidence to enter more trades, you know. But it's definitely, you know, an area to work on. It's a real struggle. You know, we all struggled with that, with confidence and having confidence in our trades and in our entries, in our analysis. But if you're pretty confident in your plan, just follow it. You know, follow your plan. And hey, you know what? If it doesn't work, then that's fine. Um, just make sure you position yourself properly with, let's say a certain trade that you're taking, and just go back to it. If it doesn't work, go back and see what you did wrong. See what you did wrong, analyze it, point it out, and just make a note of it and just make sure you don't make that mistake again. And it's all trial and error, trial and error. You won't really know if your analysis works or if your plan works if you're not executing your trades.
Thank
you
you.
know yeah, you're welcome. Do you have anything to add to that, Marana?
No. I think it's really hard to. I've said in the past, don't focus on making money, focus on learning. But it's really hard when your account is blood red, So, and I know it's very hard, but from every successful trader that I've talked to, that is the one thing that they always say: don't focus on making money, just focus on learning and executing. What you want to do is you want to focus on executing good trades, and if you practice on executing good trades, and the money will eventually follow, right? And so don't look instead of looking how much money I made, you look at how well was my analysis, how well did I stick to my plan, and how well did I execute this trade. That should be your focus when it comes to trading. And then the money making is a byproduct of that. So that takes time.
Yeah, it takes time. And brush up on those videos, those Mark Douglas videos. Those are really helpful in kind of getting your psychology right in trading, because really trading is about 80% psychology and 20% technical. It's all in your head, and if we overthink a lot about a trade and we're second guessing, it's just going to cloud our judgment. And it's just best to enter a trade when you have a clear mind, and everything else will align together, your confidence and your plan. Just stay positive. And like I said, check out those Mark Douglas videos. They're really great. He has amazing content on keeping your mind right when you're in a trade. Okay, guys.
I love those videos.
Yeah, me too. I love them. I could be watching them all day.
Yeah. And I've been listening to his book on tape too.
Yeah. The book's on tape too. Trading in the Zone. There's a really good audio book on YouTube, on that book. It's a great book. I also recommend reading The Disciplined Trader by Mark Douglas. It's really good. And I feel like, he was talking to me when I was reading it, because, he goes over a lot of common issues that we have as traders. We second guess ourselves, and we're looking at someone else's trades and their P&L. We're like, oh my gosh, I wish I made that much money. Why hadn't I taken that trade? So he touches up, on a lot of very important subjects. And I really recommend for all of you to read that book. It's a great book, and it'll really help you out with your psychology and trading. Okay, next question. Let's see. BLIN. You bought here at the top. Whenever we see these spikes, and we went over this in the course, you never buy high to sell low.
I'm sorry. Good morning. I bought around 11, so I was thinking I was catching it while it was going up. I still need a lot of work with technical analysis, but
oh, okay.
And remember, I joined the class like extremely late, like on the 7th class. So I'm trying to go back for the videos by myself, so I'm still a little lost. I can't wait for my one-on-one.
Yeah, let us know when you want to do that. Yeah, I would suggest if watch the whole course before you take a trade. Watch the whole thing, and as you go, just paper trade. I would suggest you guys paper trade, not for too long. Okay, paper trading is great, but you don't want to stay paper trading for months. No. The max you want to paper trade is maybe like a week or two. This way you can kind of get a feel for the market and get a feel for your strategy, and keep your positions realistic as to what your account would be if you were trading that stock. Okay. And I believe TD Ameritrade does that. You can ask them to reset your paper account to whatever amount you want. If you want to like at $1,000, $2,000, they could do that for you. This way, you know what it's like to trade on a live account at, let's assume, $1,000. And it'll help you, really stay disciplined, and follow through in your plan. And it'll also show you what to expect, if you have a trade that goes against you. So if you bought at 11, did you buy it yesterday around here?
Yes.
Yesterday. Okay.
No, I'm sorry. Day before yesterday, I had purchased it.
Oh, okay, here somewhere.
Yes.
Okay. All righty. Yeah. Price action is really important, and it's really important to know how to read it. Whenever you guys see these tails here at the top, especially when we have this huge rejection here, it's best to just kind of either sit back or look to grab a put, because as you can see, when we opened here at the following candle around 10 a.m., we didn't open above this candle. So this trade or calls were invalid at this time, because again, the rule of thumb is that whenever we enter a trade, we have to enter above the previous close. For example, here, the pre-market high, we have this consolidation here. And it would have made sense to get in the trade here because we opened above the previous candle and we had a huge spike, and the momentum just kept going and going. Now it's just pulling back, and it's creating a trend here. It's creating a little wedge. So let's draw that out. It's a little steep. It's a little steep, but still creating a trend line. And depending on your expiration, did you buy time? Did you buy like a long expiration or like the same week?
No, this one was just purchased the securities. It wasn't really an option.
Oh, okay. Oh, all right. Well, see, equities is different. Had you selected a contract, you would have been in a substantial loss.
Yeah.
But since you bought some equity, you can always average down. I'm not too sure about this stock. I haven't really heard about it, but let's look at the daily here. Okay, we gap down and we have a gap fill to the upside, but we had a really huge spike. So usually, like I've said, gaps fill 80% of the time. We can see this, fill the gap, but depending on how strong the sell-off was, we can see it fill that gap or not. But we are bouncing off of the support here, off of 680. If we go, below 6, You can always average down, and by averaging down, I mean buying more shares here to average your price. It might average your price maybe to like 8 or 9, depending on how many shares you buy. But it is a good idea to size down, or I'm sorry, to average down.
Yeah,
This is
I was
why,
thinking about doing that. I
yeah,
I will say this, since the class, I am much better at reading. It's crazy because I know where the price points are. I can like outline them and do all of that, but I don't know. It's either I just jump in at the wrong time. I don't know what it is, but now that you're breaking it down like this, I'm really having a better understanding, because I always notice that in the video you do say if it open up below the price it closed. I try to use those techniques, but it's like I appreciate you breaking this particular one down, because I can kind of see it a little different now.
yeah, you're welcome. Yeah. Um, yeah, you can always, like I said, average down, and we found support here at the bottom. And again, if we continue to go lower, which I think it might or it might not, we might just bounce off of this area at $6 and then take it all the way back up, because we have this trend here going on. But being that we have a weak market today, I'm not sure what to expect. We're reversing now. We might run into a short squeeze. But depending on what happens today, if we go any lower, you might just want to average down. And go ahead and contact us so we can do that one-on-one. And we'll be happy to answer, your questions, and, bring, tickers that you've traded, and any other concerns that you have. Okay. All
Also,
right.
Crystal, I just want to add, if you, as you're going through the recorded sessions, just write down questions on every single section they have there, and I think that will make the one-on-one sessions more productive. If you already have questions, either regarding the video, we can always, during the one-on-one, we can always go back to the videos and watch those at the same time, so we can make sure that you've captured everything, you're understanding everything. So you can reach out to me or Trader, which doesn't really matter. And we can both really help you get a grasp of this. But I'm proud of you, Christopher. You're taking risks, and that's fantastic. Shares is definitely a little less risky, and so we've been thinking actually to have we're going to have a workshop in the future about how to trade just stocks, just shares, not necessarily options. It's a great way to start before we jump into options. So watch out for that announcement coming out soon.
Thank you.
Okay, you're welcome. Any other questions, guys? Any other tickers you guys want to look at today? We are dipping, and was this unexpected? It kind of was, because we closed green yesterday, and these are things that are unexpected. But then again, we had we had some numbers coming out today for job numbers, and it looks like we did not beat. Let's see. I think
Yeah,
they're
I think
just
it just
like a
came
little,
out 373.
yeah. I mean, they're not that bad,
Yeah,
but they're not that great.
yeah. That's not the reason we're pulling back, but it doesn't help. It doesn't help.
Yeah. Yeah, it doesn't help. And then the Fed, he made a comment yesterday. What the heck did he say, this man? My goodness. Oh, the Atlanta Fed. He made this comment.
I know they were saying that inflation is subsidizing, and that's what I think we rallied. But of course they're going to say that.
Yeah. Yeah, but we were overextended. So this pullback was due, but again, with SPY, it runs 24 hours. So everybody's trading it at any given time. And with all this news and this technical trade here, when we started pulling back here, it just added to it. But what I like about it is that we can trade some short squeezes to the upside to fill the gaps. And that might be about it today. It looks like SPY is reversing on the 30-minute chart. So we can catch, a gap fill if we break above 429.30. We have to open above this level here, or at least take it above this resistance here to fill in the gap. Or we can continue selling under 427.50. So that's something to look out for. I was looking at the VIX earlier, and it totally, look at this huge gap. My gosh. It would have been a good idea, to grab some VIX calls yesterday, but again, it's always really uncertain with them. Sometimes you can expect to have bad news, or you can expect to have a sell-off, and it doesn't go that way. So what we can do here on the VIX, maybe we could trade it today. I like to trade it. The contracts are pretty decent and it's really liquid. So what we can do is buy some calls on SPY, grab a short squeeze, and grab some puts here on VIX, only if we break below this 31.90 area. Why? Because we have this huge gap fill to fill. So let me highlight this gap so I don't forget. There we go. We have all this to fill. Will we fill it all at once? No, I don't think so. It might be gradually. I hope we do. It has a huge drop. If we break under 31, I'll probably take profit and re-enter because this is a substantial drop that we're going to have here if we grab some puts. You can either trim your position here at 31, or you could just take profit and just re-enter, just so you can lock in some profits, and you can possibly fill the gap all the way to 29. Okay, so that's something I'm going to be looking at. Let me write that down. Okay, so VIX. All right. And then let's look at, let's see what the NASDAQ's doing. Oof, look at that. Huge drop. And if you were swinging calls, again, good idea to have gotten a long expiration to avoid having a huge loss today. Again, this is why we buy time, and it's really essential to buy time. So we might have a bottom here.
Hey, trader.
Yes.
What's the difference between VIX and then VXX? Because I was like, I wonder how your number was different. I noticed you had VXX and I had VIX. That's where I got my 20 from.
Oh, you have VIX?
Yeah.
Okay. VIX.
VX is the actual indicator. VXS, you can, yeah, VXS is the actual, it's almost like an ETF that is directly correlated to VIX.
Yeah, VIX is the actual ETF. I don't think I really heard of the VIX. I haven't really looked at that, but most of us, we trade the VIX, the VXX, the Barclays.
Oh, okay.
Yeah, this one that says Barclays.
You can
Because
trade.
When I got into it, everybody kept telling me VIX. That's what threw me. I'm like, okay.
Yeah, you can trade, you can also trade VIX futures. You can also, but there are a couple of tickers that that run next to or in along VIX. So VIX is just measuring the volatility of the market. Exactly. UVXY is another one. And I think there's three more. I can't remember the other ones. So you can tell those are ETFs, as you know, and they're all following the VIX.
Okay.
Yeah,
Yeah,
VIX is just it's the actual indicator of that's measuring the volatility of the entire market.
Gotcha. Okay. Can we look at Walmart WMT?
oh, Walmart, my favorite. Gap down. Did you grab any calls here?
No, because I was
Good.
scared.
Well, good, because you know what? We talked about it yesterday, how Walmart has been playing in the 140s, 139 area,
Right.
and it's been struggling. I mean, look what happened yesterday. We had a spike here, but we didn't hold, you know, we couldn't hold over this resistance area, and we were just trading within the price range. And then finally, you know, this morning with the weak market, we just sold off. So let me look at the daily really quick. It still looks good, you know. We can always come back and bounce off our support here.
Right. That's
Yeah,
where I was
yeah,
looking at 138.
yeah. Most likely that's what's gonna happen. And the way we can tell is because like look at all this price action, all these tails shows a lot of weakness. We don't have a lot of buyers interest and the volume's low. Although we
Right.
had a spike here, you know. So this is something to definitely keep your eyes on. And I like sell-offs because they're going to give us an opportunity to buy the dip and buy our stocks at a discount price to take it right back up.
Thank you. Yeah, that's what was holding me back was the volume. That's what scared me the most.
Yeah, the volume. And I think after today, let me see if we have any more events. I don't think we have anything else going on. Yeah, we don't. This is about it. It's just all these job numbers coming out today. And that's about it. We should be in the clear after this. So it would be a good idea for us to look for some swings, maybe midday or towards the end of the day, because our calendar is free up until the 14th. Okay, we have Powell speaking this day. It's not even on the calendar. I don't know why it's not on there, but I saw on the news feed, on the SPY news feed, that he's going to speak this day. I'm not too sure what time. But just keep in mind, guys, write it down on your calendar. On July 14th, Powell is going to speak. So we have like about 3 days where we can have some really nice volatility and take some really good trades. Up until that point, I really don't know what he's going to speak about. And then again, the next day we have more claims. So we have a bunch of data being released every week. And the feds come back on the 22nd. Usually they go on recess. I don't know why they're back. I had seen that they weren't going to come back until I think the 30th. But, you know, these people have an agenda of their own. So today, what I'm going to be looking for are swings mostly. We do have volume, but let me see here. Let's see what's going on. Okay, do you guys have any more questions? Anyone else? Any other concerns? Who is AA on our list? It's okay, guys. Ask questions. All right. Okay, so let's move forward. I was looking at TTD. And you know what? Most of these tickers here, they pulled back. I was looking at TTD right now. I pulled back substantially, and yeah, maybe we could get a gap fill here, but I'm not too interested in that one. Let's look at, let's see how this held up. Oh, this didn't do too bad. This is what I was talking about, CHD. CHD falls under XLP, and they're a company that owns, I believe, Arm & Hammer, the Arm & Hammer products and other products as well. And they're pretty decent. And he created this wedge here yesterday that I mentioned in the chat. We had this huge spike, and then we pulled back. So it's holding up pretty strong. And I actually wanted to swing it. The contracts are really decent. Like I said, they're like very affordable. We're breaking out of this this really choppy wedge that we had here. Let me go ahead and draw this pattern.
I'm always amazed, Trader, on how you find these tickers that I've never heard of, never traded before. I'm just used to my own, and I know, you said think outside the box. I just like to stick with my tickers because I know them really well. But all of a sudden, you just come up with this tickers. I'm like, wait a minute, I've never heard of this before.
Arm & Hammer, I know, right? I had no idea they were public, but I did trade this last year. And then I just took it off my list. And then once I saw, XLP trending, I just decided to, take it out of my list. And I was like, oh yeah, CHD. CHD seems to be like a resilient stock when we have these little pullbacks. And since we're going into rotation into XLP, it would make sense to look at all these holdings. So I'll tell you guys how I found it. So I went to this website, went to holdings, and I just was selective as to the tickers that I was looking at. Some of these are great, but you know what? For the most part, some of these don't really move that much. Like, Warren Buffett's super bullish on Coke, but it doesn't move that much. Coke is something that you want to trade as a leap or maybe like a long-term investment because it just doesn't move that much. I was looking at Pepsi. Pepsi's a little overbought. Walmart, I mean, we already saw how Walmart's doing. It's doing great. Costco, ran with XLP and it's already, maxed out, and I'm sure it probably pulled back also.
I like
all
trading.
These little companies. Yeah.
Sorry, the Coca-Cola. A lot of those tickers, they have really high dividends. What I've done in the past is right before they do dividends, the ticker tends to move and spike a little bit as people try to get in before the ex-dividend date. Coca-Cola is one of them. And so if you're looking at a ticker that has really high dividends, you can look at that when that ex-dividend date, which is different than earnings, right? Sometimes the ex-dividend date is a couple of days before earnings, but you can trade the run up for that. You can also buy shares. You can buy shares on, for example, ET is one of them, where they have a lot high dividends, and you can totally trade that right before the ex-dividend date because people are trying to get shares before so they can get dividends.
Yeah.
You were mentioning that Coca-Cola, it doesn't move much, but you could always find a way to trade every ticker, even if it doesn't move very much. So while you do that, sorry, you can go ahead and finish.
Okay. Yeah, and like Trader Morano was saying about dividends. So really, ideally, how you trade options is Options, you can see some volatility, like you said, with the dividends. When they increase their dividends or when they pay out their dividends, you will see some volatility in your options contract. Let's say you were trading Coca-Cola. It's a company that's really resilient, and the dividends are really affordable, and that's really why Warren Buffett has held on to this Coca-Cola since he was a teenager. It's a great company, and the dividends that it pays out are very lucrative. And you can make a living off of dividends, every month. Every month. So that's what I wanted to say. So go ahead, Marana.
Oh, I was just gonna share a couple of tickers if there's none, no other I guess suggestions or questions. I have
Yeah.
one ticker. I was looking at Beyond. They, I like where it's sitting at right now. I have my volume profile set up on my chart. If you look at the daily, it's sitting at what I would call that the volume shelf, and that range where it's at right now, 140, 141. It's come and retest that level again and again and again. And so I'm looking at this pullback, and I'm looking for a move to the upside as people will. There's a lot of demand at this zone. And so if we zoom out a little bit more, you'll be able to see that at that range, 140, 141, that is the area. If you were to draw essentially a zone, it hits that area, and then it bounces up or down. And so that tends to be the area where it likes to bunny hop and just to kind of just dance around, and then it moves. And so I'm definitely watching for Beyond as one of the tickers. It is very volatile, and I think they just had news. Yeah, they just had news on releasing some products. So some fake chicken. I don't know who would eat that stuff, but
Yeah,
that's
a good
one of them
trade.
to watch. I don't know if you guys ever had that fake meat, but good for you. I might. Yeah.
Tried it. Starbucks has their Beyond or
That's
their
right.
Impossible sandwich, something like that. Yeah,
Rachel,
it's
not
pretty
a
good.
fan. Rachel's not a fan.
I know, imitation meat. Well, I tried it and I had no idea it was a Beyond Meat patty.
Oh, wow.
It tasted like sausage. It did. I was really full.
Wow.
I was really full.
Give me real meat any day of the week.
Yeah. I don't know what's in that meat, to be honest with you.
Exactly. Could be dog food for all we know.
Yeah.
I don't
I'm okay. I'm okay with taking my chances and having some red meat. It's okay.
Yeah, as long as it's not mooing, I'm okay.
Yeah. Okay, guys, that's it though. We're gonna wrap it up. Anything else you want to add, Rano?
No, I just saw there's a ticker that I mentioned in our equity channel, CARV. I've been averaging on that sucker for the last couple of days, and you go to the 4-hour, and we gapped up nicely. So I'm quietly dancing around.
Wow.
It's heavily shorted. I think it's about 80% at the moment, if I'm not mistaken. But I started buying around 13, and then now I'm like 12. I have a couple of shares. So that's one to watch. It's very volatile. It doesn't have options, but for Crystal, if you want to look at equity, I'll be sharing more equity equity ideas in the chat.
I was watching that very one today. I was.
Excellent. Carve is very volatile, but so I'm in terms of equity, I have Carve and Wish and EH. Those are the only 3 ones that I have at the moment. Wish is one that's on a lot of people's minds. I have EH, very, very small position. I think I have like 20 shares, really nothing big. But there's the upside if you zoom out to the to the daily, the upside can be big. So I'm not too concerned. Obviously, I didn't go in all the way because there's the risk. But at this point, if you look at risk and reward in terms of equity, if it's already high, you need to go very, very light. But if it's at the bottom, you can always start slowly averaging down as the ticker starts moving up in your direction. Then you can go a little bit heavier. And then once you start in the green, and once you're up, 10% or 20% on equity, you start cutting down, reducing your position, and start taking profits. So we'll have a workshop about how to trade just equity, and not just options. It'll be good practice for all of you. And that's it.
Yeah.
That's all that.
Yeah, that's it. That's it, guys. So shoot us any questions, any feedback. We'll appreciate it. Thank you so much for everyone that attended. I really had fun interacting with everyone. So I hope we have a great trading day. If we don't have a lot of volume or we see a lot of consolidation, it might just be a day to just kind of stay cash. And we can just look for some swings into next week. And so we'll call it a day. Let's have a great day, everybody.
Bye, thanks.
Thank you.
All right, thank you.